What's going on, everybody? It's Wednesday, October 19th, 2022, daily log episode number 33. Today we'll be covering what happened on US 500 and the trade we all took together. Hopefully you guys were able to get into the trade that was forecasted prior to the New York session. I think it was a really easy trade, and hopefully it was clear enough through the morning session log here. I annotated, and then even I posted the chart here with the 5-minute. We are looking for shorts. So I'll go ahead and cover what happened. I'm looking at the 4-hour time frame. Let me actually get rid of that. So this is where we're resting right now. Let me go down to the 1-hour time frame, and I'll do a little replay button just so we can all look at price and see what happened. If you were trading today or you didn't participate, hopefully this will be a good review for your study. So coming into New York session, I was looking at the sell side liquidity resting underneath the low at 36.87. So relative equal lows, we're building up some more liquidity here as well. So we have buy side here and sell side here. So this is one of those times where you're stuck inside of a dealing range, but it was clear to me that we were looking to attack the sell side just because we were near it. We failed to get above that high here. And I believe there was no SMT to confirm that bearish, but through experience, I've just seen that if you're coming in a New York session, you're near the sell side, and we are looking on the 4-hour, looking for this fair value gap to get traded into, because from the dealing range low to the dealing range high, it's inside of a discount. So I believe price needs to get into a discount before we can start heading into the buy side liquidity resting above here, and especially the daily time frame. If we're in the present moment, and even just looking at now, there was no indication to me that we were going to displace higher today. So just looking at the daily time frame, we had the volume imbalance to target to fully fill it in, and we have this bullish order block here as well that we've tapped into the premium end there. So let's go back to the 1-hour. This is exactly how it looked. And I drew your attention towards the fair value gap on the 1-hour. And also this up close candle, which is your bearish order block. Going down to the 30-minute, it was the same thing, same area, the 30-minute fair value gap, and then I drew your attention to the up close candles here. The sell side resting underneath the lows there as well was our draw on liquidity. So that's the narrative. We're looking for sell side to be ran out. The 15-minute didn't have anything super clear to me, so I jumped down to a 5-minute, and that's when I found the fair value gap resting from this low to that high. And this fair value gap is inside of a premium. And this all goes back to, if you watched my video from yesterday, this all goes back to our rules, okay? Do you see how yesterday, if I broke my rules, that could have led in today? I could have, tried to go short on, some fair value gaps down here that weren't inside of a premium, and I would have made a mistake. So it's the best just to wait for a day that agrees and aligns with your rules. This fair value gap aligned with our rules and the criteria that has been set for us. So your model will always form regardless if it hits your entry or not. It's going to form within your rules at one point or time throughout the week, throughout the month. So just wait for it, trust it. I think this was a super clear trade. I mean, if you've been around for a while, you understand that you're always looking for fair value gaps and a premium if you're looking to go short and in a discount to go long. And we're just looking to target the sell side liquidity. Try to keep it as simple as possible. I think we already did the work here by taking out the buy stops, displacing lower, and you can start just reading order flow and seeing what it's respecting. And that can give you an idea of what, you're looking for coming into New York. So if we go ahead and fast forward this, right here was the open at 8:30 my time. So immediately from the jump, we displaced right into that fair value gap. Now, I think I've talked about this before, and I know ICT has. If you're new to this, start getting comfortable with selling in up close candles and buying in down close candles. Some people might have been scared by this. This does not surprise me. This is a very good sign. I love to see this when we just immediately from the open draw right into our area of interest, and then we displace lower. So I had my limit set right at about 25% here, and stops were above the high. So I believe I was only risking about 10 points, which is usually what I'm risking. And I was targeting the sell side liquidity resting underneath the low here. And I put in Telegram, you should be taking partials underneath 36.91. And just so we're all clear, first partial should be 36.91 and then 36.87. So 36.91 was underneath the low there, and then 36.87. So ultimately, if you play this out, I took most of my profits somewhere in here. It was right around 20 points, which is what I'm looking for. And then I kept a runner on. I was about 90% off the table here. I had stops at break even, and I was looking to see if we could just run that low there, just for shits and giggles. So that's why taking partials is so key. You know, if taking partials is not for you and you like taking, fully out of your position, then by all means do it. Works best for you. But I've seen that partials is what's best for me because it keeps me a lot more calm, a lot more collected throughout the trade. I can see a lot more clearly. My emotions don't get to me as much. So going throughout the rest of the day, I had your attention looking at this 5-minute fair value gap and just seeing how price reacted to bearish PD rays. And once we broke above it, that's how you know the trade's invalid. Okay. So that's why for me, taking partials is so key in my development and having my stops to break even. It was a risk-free trade. At that point, I really didn't care what it did. Ultimately, we ran above that high and then we displaced lower. I believe in the PM session, there was a couple opportunities. And then we got underneath 36.87. So let's go down to like a 2-minute. There's a few opportunities after we took out the buy side liquidity resting above the high there. We displaced lower. Nice little fair value gap. Came into it. Let me just double check if that's inside of a premium. So just hit the equilibrium of it. Came once more into the fair value gap there. Came into a premium relative from the dealing range high down to the dealing range low. Use that reclaim fair value gap again. Displaced. And then we just have been trading lower ever since. So I believe to me this was the best setup overall. It gives you that nice quick 2R, 3R, and you're out of the market, and you can go enjoy the rest of your day. So looking at the rest of the week here, ran out the sell stops, and we've just kind of been consolidating. Looking at the daily time frame, we're really not in the most high probability price action right now. The reason being is we're just stuck in between this dealing range high and the dealing range low. So we've just been kind of trading in between here, which is really not a good sign because you want a good trending market with a good, clear draw on liquidity. I don't want to say I could justify both sides because I really don't see this being traded to this week. I would rather see the buy side liquidity being traded to. But do you see how I'm a little uncertain of that? It's not a clearly one-sided draw on liquidity. I'm not, 100% on this. So that makes it a little less probable of things playing out. Looking at the weekly time frame as well, I'm a little concerned. We've came back up into this fair value gap, so reclaim fair value gap. We're using it. And we've since have displaced lower. So it could be signaling us that we could possibly head lower. For me, this volume imbalance and the daily bullish order block needs to hold in order for us to head higher. The 4-hour time frame, the last point, I guess, in defense is this fair value gap resting in here, which ultimately is what I would like for price to dip into and then for us to run higher. Because that's inside of a premium or a discount relative from the dealing range low. up to the dealing range high. So that is a valid setup. If we get in there, I'm not saying you should be buying at that for value gap. If that's your model, then obviously execute. But for me, I'm going to wait for more information down here. So I hit my weekly profit goal for the week, and I'm going to be probably just paper trading or reading the tape the rest of the week. It's been amazing to forecast. I've received amazing feedback today. Many of you guys took the same trade along with me, so amazing to see that. 2 more days left of the week. We have news tomorrow and then Friday, so let's end out the week with a bang. And until tomorrow, good luck and good trading, everybody.